Hey everybody, it's Mike from Orderflows, and this is a follow-up video to a video I did earlier in the week on automating the Orderflows sequencing tool in markers. And many people believe that automated trading is good because it can help take the emotion out of trading. Because when people are trading manually, and by manually I mean just entering using your mouse as opposed to having a computer do it for you, they're often influenced by their emotions and make decisions that are not based on logic, right? They deviate from their trading plan. However, when you automate your trading system, then it's basically designed to trade based on a preset rules and criteria, which means that the emotions are no longer a factor. So let's jump into it. And the other day I laid out the steps to what do you want to call it, automate the Orderflows sequencing tool in markers. And again, it's very easy to do. I'll just sort of take you through the steps really quick. Again, this is Ultra Bonds. This is a 1-minute chart. And all you got to do is you add the indicator. Okay, make sure it shows up down there. Change it to the settings that you want to use. And then you're going to add markers plus and 2 copies of markers copy, one for the buy, one for the sell, and you just sort of go in here and make the changes. This is a day. This video is really meant for people that are thinking of getting the sequencing tool or getting markers. I don't sell markers. It's from another vendor. It's from Pablo at the Indicator store, and it's a great tool for automating your trade entry, which is, I use it to mainly as a trade entry tool. I mean, you can use it as a full-blown entry and exit, take profit, but I trade the order flow, so I like to read what's happening in the market, right? Because that's the whole point of reading order flow, is understanding what's happening in the market. Because there's times where when you set something automatic, right, a trading system to be automatic, you really have to be on point with your stop level. And sometimes your take profit is too tight. Okay, sometimes you want to have it a bit wider, take advantage of the trade. Because if you have a take profit that's just say 8 ticks or something, but the trade runs 20 ticks, and you take out at 8 ticks, right, instead of catching double that. So while automated trading does have its advantages, it does also have some limitations. But let me just get this set up here really quick, and then I'll talk some more about it. But let me just go through the setup process. Again, you see it's really very simple to set up. It doesn't take, I'm just setting it up from scratch. I do have it loaded, but I want people to sort of get used to it and see how easy it is to actually set up the tool. Okay, let's see that here. This is the sell signal. Okay, because in the other video I went through the whole entire steps involved, but again, it's really simple. In the description below, you'll have all the instructions for how to set it up. Okay, we should be good to go. One last thing to do: add the chart trader. Okay, in the last video that I did the other day, I used my regular Ultra Bond stop level, which is, you'll see here, is 5 and 7. Okay, and again, whenever you enter a trade, you should always have the computer set up. I mean, now all trading platforms pretty much have it, but have your stop automatically as soon as you get long or get short. Have your stop to get out, so you don't have unlimited risk, and throw in a take profits. Okay, and 5 and 7, some people said, well, that's very very tight. Some people like to say, these gurus out there, people that have just been trading for since the COVID hit, basically the last year and a half. These are the ones that you see posting, oh yeah, I had a great day. You should always have a 10-to-1 risk reward ratio. Unfortunately, markets don't always go 10-to-1, right? So you understand the market you're trading. I know what type of trader I am, right? I'm a short-term intraday trader, more of closer to a scalper than a day trader. And so I have a lot of trades that I'm taking during the course of the day. And, you don't have to use 5 and 7, right? You could use 5 and 10. You could use 5 and 9, or you could use 4 and 9. It's up to you. Understand, do your research on the market to find out, based on your trading strategy, sort of, what kind of runs you get, how much risk are you willing to take. And, I'll just keep this at 5 and 9. Actually, let me see here. What I'll do is I'll create a new one here. Go here, new custom. Okay. Use 5 and 9. That's almost what was that, 2-to-1? I mean, 5 and 10 would be 2-to-1, but I like to adjust my take profits, because there's times where it goes within one tick of your take profit and then reverses and goes to your stop. And by watching the market, by watching the order flow, if I see it gets within one tick of my take profit and starts reversing, I may choose to get out earlier rather than get stopped out, or I may move my stop to break even. So rather than taking a 5-tick stop, I'm able to, basically scratch the trade. So I'll save this as, call it Ultra Bond UB 5/9. So 5-tick stop, 9-tick take profit. So just under 2-to-1. And I'll click OK to save it. So go through some of these last minute checks. Make sure, what count do we got here? Do I have the playback mode? Not yet. Okay, where's my NinjaTrader? Okay, playback connection. Okay, I wasn't connected there to playback. So what you got to do is make sure the account here is the same here. Again, I'm shooting this. It's Tuesday morning. It's about 9:30, 9:45. So I downloaded the Ultra Bonds since Sunday night to reopen. It is now again Wednesday morning, about 9:30 ish. So I'm just waiting for the data to load. But make sure the Ultra Bond new stop take profit level is set in, right? So Ultra Bond 5/9. Okay. All right, so it's good to go here. So let me just I'll just pause it for a second while, here it is. We've come back up. All right, so you can see it's starting on Saturday, but let me just speed it up. It's going to take a while to start running. Okay, so while it's catching up here, I'll just talk about sort of some of the pluses and the pros and cons of automating trading. Is the pros would be it's going to increase your accuracy of trade execution, right? Because it's automating that process of entering trades for you, right? So there's less room for human error. You're not sitting around hemming and hawing. Do I take this trade? Do I not take this trade? The computer doesn't care. It has its set rules. If they're met, boom, it gets you into the trade. Sometimes people get, what do you want to call it, confused. They have their way of trading. Their setup is there to buy, E-minis, but they see NASDAQ is ticking down, and maybe I should wait a while. And the E-minis, the trade, they don't take the trade worked. So it sort of removes that bit of hesitation from your trading. So it's going to help you improve your speed of execution. And in a fast-moving market, manual trading, point and click using your mouse can be slow and cumbersome. Sometimes you're like, especially if you got multiple screens, right? You're running around trying to find, where's my mouse at, right? It's on some other screen or something, and by the time you click the trade, the market's already moving. So by automating the process, it helps you to execute your trades quickly and efficiently, which is, what you want to do, right? You want to be efficient in your executions. And, a lot of people don't understand that, right? And, the whole concept of execution alpha comes into play because, imagine you're taking a lot of trades over, a period of time. Imagine you could just improve your execution, right, of getting into a trade by a tick, half a tick, but you're doing hundreds of trades. That half of a tick, say you're trading E-minis, right? It's $12.50 a tick. If you're saving a half a tick, that's what, 6 1/4. But you do it over how many hundreds of trades? 6 1/4 adds up over time, right? So your 6 1/4 over, I don't know, 100 trades is already $600, right? You're coming out ahead. Okay, we're coming up on the open. Again, I'm just running the replay from, it started on, my data went back to the 26th instead of the 27th. But anyway, here we are. Okay, so it's starting up. All right, so again, I have a stop level of 5 ticks, take profit of 9 ticks. Okay, so while there's the biggest benefit to me is the execution part in execution for my trading strategy, there's drawbacks that you have to consider as well, right? And one of the main risks is sometimes you're gonna, this sort of goes contrary, is you're going to end up trading more frequently because you are removing that human factor. So it doesn't care, whether S&Ps are going up and NASDAQ's going down. It just takes the trade. And I know some people, they won't take a trade in the S&Ps if NASDAQ is going in the opposite direction. And if you're manually trading, you might fall into that. So, if you're taking every single trade that comes through, then obviously your transaction costs are going to go up because you're going to be taking more trades. And you have obviously a potential for more losses if the market is not performing as expected. And, that sort of leads into the second part is when you automate your trading, it loses sight of the overall market picture, what the market is doing. And why that's important is because, if the market is going sideways, okay, that's not good trade location, right? If you're in the middle of a value that's forming, right, and the market's just sort of rotating around value, any trading strategy is not going to be effective, right? It doesn't matter. You can have the best trading system in the world, but if you're stuck dab in the middle of the value area, right, or in the middle of a consolidation, it's probably not going to be very effective, right? The moves that happen may not be your normal moves to your take profit. They'll be smaller, okay? But if you automate your trading, you don't understand, the computer doesn't understand the trading environment that you're in, okay? So, that's, to me, that's one of the drawbacks, right? You should know that if you're looking at the chart and say, oh, we've been in this tight range for the last 2 hours, okay, maybe some news event is happening, maybe there's a Fed meeting and they're going to announce something later in the day, then, you might not want to be active in the market, right? You'd turn off your, call it your automated trading method. But, on a normal market conditions, you'd let it run. So understanding the market conditions that you're in, okay? So trading systems sometimes do fail, right? You can become disconnected to the internet, right? Maybe you don't realize that. And you can, leave an order out there hanging or something that's working, one side working. There's certain issues that you have to deal with, just as, when you're dealing with electronic trading, there's always little issues that you got to deal with. Just, bear that in mind. But really, I think the big difference is the execution part, because for many traders, I feel that's the difference between success and failure. All right, so here we're going off. What time is this? So now it's Monday. It's about noon. What are we running? Plus 1250. Again, this is on Ultra Bonds, a 1 minute chart. using a 5-tick take profit, 5-tick stop, 9-tick take profit. What time is it here? It's 2:30. Again, in all honesty, bonds, interest rates after 2 o'clock, even though the market's still open until 4, and you see there's a nice little move up here, for all intents and purposes, let me just pause this here because we're at 4:20. Basically, the time between 2 and 4 o'clock, there is trading. The futures are open, but really cash dealers are done for the most part trading. So see on Monday, okay, it ended up $1,400. Okay, that's using a take profit of 5 and 9. Again, this is all hypothetical. I'm just running this in the playback mode. So let's move on to Monday. Okay. All right, here. So Monday's starting. This will reset. Now it does have an open position going on from around the close on Monday into the reopen Monday night. So you see that's why there was that entry here and it got out up here. So let's just see how this goes on Tuesday, because I made the video that I posted up on Monday night of the Monday activity. I just want to follow it up with Tuesday's activity as well, and I think I got the data until about 9:30 on Wednesday. So we'll just run it. So what time is it? So it's about midnight. We're running down $60. Let me drink of water here. Okay, so let me just pause this here for a second. Now, say you're manually trading this, okay? Obviously, you got an entry here, right? It doesn't stop you out, and then it starts coming down again, right? This is where discretionary trading comes in. You can always add, you get another couple signals in here. You just add on to your position. You don't have to close it out because it's at your target. You can just add on to it, right? And catching more of the move down. So it gives you, again, that flexibility if you're trading sort of, I don't want to say automatic, but, semi-automatic, using it for your trade entry, using it, then just manage the trades manually. So, for example, right, here we are, we're in an area of consolidation sideways, right? If I had my order flow chart up, I might not want to be taking so many trades in here, but nevertheless, if you're using fully automated trading, it's taking the trade, stopping you out, taking the trade, stopping you out, taking the trade, stopping you out, right? And some people can't handle, I think there was probably looks like this was 1, 2, 3, 4 losers in a row, Some people, they can't stomach that for some reason, but, in trading, that's what happens. You do sometimes get strings of losers just as you get strings of winners, right? So right now we're running at minus 750, right? And some people, they'd want to vomit already. But, here's that minus, what is that? Minus 800. But if you have faith in your system, have faith in your trading, you're willing to ride it out because you've done the analysis, you've done the testing that that ultimately you'll come out ahead. Okay, so look at this. What time is it here? So it's 950. It's down basically $1,000. It's down 906. I think at one point it was down 1,000. But there's a lot of little trades in here. And again, if you are trading manually, right, rather than getting stopped out on some of these losers, you're able to scratch the trade, right? So that's what I talk about when I say, manage the trade, right? Again, I use order flow to manage my trades. I use tools to automate the entry, okay? Because, sometimes, if you're watching multiple markets, it does get confusing sometimes because you're like, oh, something's happened in this market and then you miss, a trade because you're concentrating on a position and you don't get into the other trade that you should. Okay, so here, okay, it's gone from what? It's at plus $31 right now. So obviously there was some runs up here. This one, got long at 09, stopped out at 04, and then a long here at 16, out at 25, long again. But if you're trading this, you see the market running, in the order flow, you might move your take profit from 07 up to 15, right? If you see a strong market. But again, it comes down to, it comes down to you and your trading style and whether you can do it. And I said, when I talk about automated trading, I use it for trade entry, right? I'm not the type to just sort of run it, walk away from the computer for the entire day and just sort of come back and see, oh, how did I do? But you could, but I like to watch what's happening in the market. Okay, so we ended up Tuesday. Okay, it's 4:03. Stopping this. Had a lot of trades. It's down $31. But we'll look at the trade recap, the amount of trades taken a bit later. But again, this is that time where it's very illiquid, but you do get some nice moves at that time. But if you were, again, if you're trading this, right, and you see it screaming up, you have your long at 01. Actually, I think, yeah, you're long at 01 right here. Or is it right here? And it starts going up, and you see some very strong buying. Okay. Maybe you back off from 11, to 15. Again, it's hypothetical because, I'm just showing you this in replay. But when you're watching the order flow, you can do that. Or if you're in a trade, for example, where was, you're here, right? You get long at 25 right up here, and you just see the market just drifting sideways. Trading 22, your stop's at 20. You think, we're in a sideways, nothing's happening, right? Just cut it at 22. You just saved yourself 2 ticks, basically. And I'm sure there's some other trades in here where if you're, managing the trade, here's a trade, okay? So you're getting short here at 06, okay? Your stop's at 11. Starts grading down, trades down, all the way down to, what is that, 30. So that's 7 ticks. But your take profit is just right here at, at 28. Then you start seeing it come back up. Again, your stop's up here at 11. Starts coming back up, 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 up. Okay, remember, you're short at 06. And you just got this move within 2 ticks of your take profit. Maybe you drop your stop down to 06, or maybe you come down to 04, right? Because obviously you got this big bar down. If it starts coming back up above that, it's probably going to keep going up. So maybe you drop it down to 04. So instead of taking that 5-tick loss, you actually got a 2-tick profit. Okay, so that's if you're just trading fully automatic, 100% automatic, the computer's not going to make those decisions for you, right? That's where you as a trader have to come in and make those decisions, right? That's why you trade, is to make the decisions. All right, so let's see here. So this is Wednesday, the reopen here. Again, I'm shooting this video. It's about 9, so it's coming up on 10 o'clock, but I think my data is until about 9:30, so we'll see how. Okay, so look at that. All right, it's already down $500. Not a good. Again, this is what I'm talking about, right? You're short here at where is it? At 04, but then it came all the way back up here and stopped you out. Okay, you just use the software to get you in to the trade. You're short at 04. It goes all the way down to 28. All right, your take profit is probably here at 26 or 27. But it's just going sideways in here. So rather than waiting for it to come all the way back up here to 09 to stop you out, you start seeing it, again, you're short here, right, at 04. You start seeing it tick back up. You drop your stop from 09 down to at least 04 to break even, or maybe, 00, right? We've got spending all this time below 00, so instead of having a 5-tick loser, you got a 4-tick winner. But again, that's for traders that understand how to trade. Again, we all like to think that we could automate everything, and not just trading, but in life. Sometimes it's best to just manage it yourself. Because remember, right, there's nobody putting a gun to your head saying, oh, you got to take this trade and stay in it till it stops you out. So this is one. Now this is one, right? You're getting short here at 26, target's at 17. Okay, that's fine. I know some people that, again, they would just drop their stop down to 20. Right, they're short at 26, stop down to 20, 21, move their target from 17, down another 5 ticks to 12. Okay, they're willing to protect their profit by moving their stop, and try to take more out of the move. And something similar here, right? You could have gotten more out of that move. What are we at here? Sometimes it's 3 in the morning. Plus 187. Sort of running into a rough patch here. We're sort of going sideways at the low. Okay, so here, this trade, right? You're long from 30. Trades all the way up to 04. Spending a lot of time before it stops you out down here at 25. Again, you could have moved your stop up, right? So there's different ways to manage it. Literally, it's stopped here at 920, and it's at break even so far for this Wednesday. But hopefully you could understand. You can start to see this, right? Let me look at these trades. If you're managing your trades, right? Let's get this out of the way here. Okay, so you're long from 14 with your target at 23. It only pulled back to 19, so you're at plus 5. Again, you move your stop up to break even. Maybe you back off from 23 up to 28, right? Or you got some stuff going on in here. If you try to move your you're short from 21, covered it at 12. It did come down to what, 10? So if you moved your take profit here, probably wouldn't have filled you, but you could have just moved it back, right? Could have moved it back up to 12, or maybe, you definitely drop your stop down to 15, and maybe that kept you out of this other trade, the short at 11. See what else, you could have managed a bit better. I mean, there's always trades that you could look back on and see how can I have managed this better. Yeah, again, you're long from 30, and it just goes up, just sort of hangs around up there. Just move your stop up. If it's spending a lot of time above your entry and it hasn't quite hit your take profit, consider moving your stop up, somewhere in the money. these are the worst ones where it fills you on the low of the move and stops you out up there, then makes the move down. Again, you're short here at 22. It's going down, 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 starts coming back rather than getting stopped out up here at 27. Maybe you drop your stop down to your entry once it's firmly in the money and it starts coming back. Maybe you get stopped out at 22 or 23. So there's there's a lot of different ways that you can manage it, right? I mean, trading is all about managing your risk, right? And the risk comes up when you're in a trade, basically. Now, let's look at this trade performance, right? So total net profit for Monday, Tuesday, Wednesday so far, $1,300. Most of it came on Monday. Right now, Wednesday is kind of break even, and Tuesday was kind of break even. Obviously, a lot of trades, 152. Sharp ratio 2.36. But some of these trades, honestly, you could have ridden out for more. For example, this one, that move the day before during the European session, it's also, I think it was, this nice move down. I think you could just add it on rather than get out and get short again. Oops, what day am I on? This trade here. All right, you're short at 12. Your target's at 03, but you probably could have gotten more. I mean, once it's in your favor down in here. I mean, you just drop your stop down to, you're short at 12. You drop your stop down to 07, 08. You move your target at least from 03 down to, another 5 ticks would be 28. And you just sort of see it hanging around here. Maybe you come up and seeing the sideways activity, you get out at 00. But again, I think catching all this further move down to 172.00, I think that's a bit optimistic. And in reality, you got this area where it just sort of goes sideways, comes off, goes sideways, comes off, rallies back up. I think you need balls of steel to ride that down if you're a short-term trader, that is. So, hopefully this sort of clears up some of the questions you have about automating your trading. And again, these are the instructions for automating the order flow sequencing tool with markers. Again, they'll be in the description below. So again, if you're interested in the sequencing tool, go to orderflows.com/sequencing/index.html, and I'll see you guys on the inside. Probably Thursday I can't, but probably by Friday I'll post up another video just to show you the rest of the week in Ultra Bonds rather than just show you the one day that had a big winner. But honestly, if the difference of your stop and take profit level, right? I mean, if I was using the 5 and 7, which I used on the original video, it actually had different results. So, expanding it out there's going to be a difference in your results, and that's what the nice thing about automating your systems are. You can see the differences, and the reason why I did this video with a different stop and take profit is because people have asked me, why are you using 5 and 7? Why not 2 to 1 or something higher? So I shot this one using 5 and 9. Maybe on Friday I'll sort of recap it with the different what do you call it, the different stop levels, or stop levels the same, but the different take profits, so you can see, because there's just so many different ways to trade it. And I don't want to put out a video and people say, well, Mike did use this, that's what I have to use. No, you're a trader, you got to decide what works for you. So thanks everybody for watching this video, and I'll see you guys later.